Hi, I'm Susan Javinsky from Morningstar. The first quarter of 2019 is officially in the books. Here's a look at 3 Morningstar Medalist funds whose returns finished near the top of their respective categories last quarter.
Invesco Small Cap Value is the top performing fund in the Small Value Morningstar category year to date, but this follows a bottom decile 2018 showing when it shed a quarter of its value. Now, the fund also underwent a management change in 2018 when longtime co-managers Jonathan Edwards and Jonathan Moeller took over, but the two didn't change the strategy's aggressive investment approach, which seeks deeply discounted stocks with a contrarian bent, but leads to higher volatility. Now, the two are patient and they don't turn the portfolio over that often, but this high beta profile can lead to wide swings in performance year to year. Still, the fund has low fees and recently reopened to new investors in January 2019. Investors can succeed here, but patience and an appetite for risk are required.
Neuberger Berman intrinsic value is off to a strong start this year. Investors have been bargain hunting, and that's what manager Ben Nahum and his team do well. They look for undervalued and even distressed firms that nonetheless have promising cash flows, and that typically leads them into growthier areas like tech and healthcare and industrials, where their stock selection has been particularly good recently. But this fund is not just a flash in the pan. These managers are very experienced and they've shown that they can pick stocks well over time, and that's what makes this fund a good option for long-term investors.
Hotchkiss & Wiley Mid-Cap Value has been a very volatile but very effective fund over time. Its performance in the fourth quarter of last year and the first quarter so far of this year have been kind of the perfect microcosm of how this fund does in both up markets and down markets. If you recall, in the fourth quarter of last year, we had a pretty nasty correction, and the fund did far worse, or at least quite a bit worse, than its index. This year has been the opposite of that, and granted, market conditions have changed. We've had a very strong rally, but this fund has done especially well because a lot of those same positions in energy and financials have bounced back. And for anyone looking at this fund, looking to add it to their portfolio, keep in mind that, again, this is a very volatile, very aggressive fund. It has outperformed over the long term, but you've got to be able to sustain the volatility that comes with it.